So another exchange has gone down. This one possibly could go insolvent, and that is none other than FTX, Sam Bankman-Fried. I used to call him Sam Bankman-Fried. You know, I made a video about this dude about 2-3 years ago. Check it out. I'll leave the link in the description box below. When he first came into the game, you know, he was cool, man. But hey, somewhere down the line, dude's gone rogue. So today we got to check out FTX. Coffeezilla just dropped a video about him. Stay tuned, like and subscribe. Let's check it out.
Who won and what's next? Now, I'm going to be honest, I called this yesterday. I warned you guys that FTX, second largest exchange, might be insolvent, and people called me crazy. They said, no way the guy who described all of DeFi as a Ponzi scheme could be bad. Sam Bankman-Fried, he's just too smart. FTX, after all, is endorsed by Tom Brady. What could go wrong with another celebrity endorsement? People like Larry David backed FTX. Surely your funds are safe. Well, turns out they were actually in danger all along, and things are looking very bad. So I'm going to explain to you this entire mess very quick, but bear in mind this is a very dynamic situation. Things are changing by the hour. But let's get into it. Once there existed two rival crypto exchanges, Binance and FTX, the #1 and #2 crypto exchanges. And their CEOs, CZ and SBF, or Sam Bankman-Fried, hate each other. That's an important part of this story. But things were calm at first, for the most part. They played nice for years, until recently, SBF decided to take a pot shot at his competitors' attempts to work with regulators and said, he is allowed to go to DC, right? Implying that CZ was banned. Now, he didn't know it at the time, but SBF set off World War III in crypto with this tweet, and he might have signed his own funeral. Because a few days later, a report came out from CoinDesk leaking FTX's financial balance sheet. And what it showed is that they had a lot of money, but it was sort of locked up in all these token projects they were a part of, most notably in FTT token.
Same thing with Do Kwon, Richard Hart, and you can't poke at certain people, bro. Like, Do Kwon used to do this a lot in the height when Terra Luna was at its height and one of the most established top 10 cryptocurrencies, well respected. Do Kwon used to tweet and poke at people who are very powerful, at high ranking crypto, personalities, and that's a mistake I guess Sam Bankman-Fried was doing. He tried to compete with CZ and Binance many months ago, and that mistake is costing him all of the stuff that is going on right now. Look, Sam used to be a really cool guy, and I rated him for this one reason. Back in 2020, right, when DeFi first started, but when the DeFi boom happened on Ethereum, Uniswap was the #1 exchange, first DEX in crypto. Uniswap needed a competition, so there's a guy on Twitter named Chief Nomi. Chief Nomi decided to create SushiSwap as a rival to Uniswap. Now, he did all of his offerings and, coded everything, and it got ready, but he left some bugs in there, and then he created this giant liquidity pool, and that was the first liquidity pool on SushiSwap. People aped in. They wanted to buy the SushiSwap tokens once they got everything, and they started doing their DeFi on SushiSwap. Millions of dollars started to pile up in that liquidity pool. Chief Nomi woke up. He'd never seen that kind of money in his life. Pulled the plug. He pulled the rug. He rugged everybody. And then he was the main developer of SushiSwap, the second DEX at the time to compete with Uniswap. And then when Chief Nomi did that, stole the money, literally everybody was, people just lost hope, man. DeFi is a scam. DeFi is a scam. You could see it in my video. Go back and watch it. That was about 2 years ago. And who stepped in to save everybody? That was none other than Sam Bankman-Fried. I used to call him Sam Bankman-Fried because, the name. And, it was a cool thing that he did, and I really rated him and I praised him for doing that. And he stepped in. He bought SushiSwap. He worked with Chief Nomi to return some of the funds and then keep the rest. And then he just took over SushiSwap, and it's been dope since then. So he really made his money with DeFi, Sam Bankman-Fried. So After that, he founded his FTT tokens, SPF, and then he took off from there, become one of the largest crypto exchanges in the globe, right? This is how Sam Bankman-Fried was introduced to crypto, pretty much through sushiswap and that. But then, later on down the line, they found out that, he's in it with these politicians and he's doing a lot of stuff behind the scene to hurt crypto. Allegedly, the likes of BitBoy Crypto have been attacking him. And now there's rumors going around that his exchange itself might be insolvent because he might have over leveraged himself. I don't know what he did with people's money, but hey, we never know. Binance was holding a lot of his tokens. That explained yesterday why Binance said, hey, you're not going to Luna us, pretty much. We're going to dump your tokens before this bad thing happened. And turns out they struck a deal behind the scene, and now CZ could be an owner of FTX.
Solana and other projects that they were behind. And they couldn't sell the projects anytime they wanted to. In other words, even though they had billions of dollars worth of assets, they weren't very liquid. And it was arguable that some of the coins weren't that valuable. So they couldn't get access to these funds immediately. Meanwhile, they had huge liabilities of $8 billion, 7.4 billion of which were loans. Now, Dirty Bubble Media, who is the person who called out the collapse of Celsius, which we've talked about extensively, picked this up in a scathing report. In it, he suggested that FTX and Alameda Research might be insolvent because all their money was locked up in these tokens that might be worthless. And if everyone tried to withdraw their money all at once, the company could likely not pay off their liabilities. Now, CZ saw this and decided to take an opportunity to strike against his biggest rival. He announced that day that because of recent revelations, which because of that report, quote, we have decided to liquidate any remaining FTT on our books. Now, this was massive given that FTX's #1 holding was FTT. Their competitor Binance is saying that they're going to dump up to $2.1 billion worth of it on the open market, causing that price to plummet. Now, all of a sudden, you don't even have illiquid funds. You just have none of those funds. So even though CZ said that this was not a move against a competitor, it kind of looked like it was, right? Of course, he's going to say that. In reality, he knew what he was doing. Now, immediately, this stoked...
I like CZ, man. CZ, he plays chess in his tweets. Like, him and another guy, Jack Levin, they do that, man. Sometimes they tweet and they throw these subliminals in their tweets. It's hilarious. Those who get it, get it.
Stoked all sorts of fears about the solvency of FTX. And the fear spread like wildfire. Is FTX the next Luna? Is FTX the next Celsius? And people started to withdraw funds like crazy, which honestly was the logical move to make. The problem with crypto exchanges right now is that because there's no monetary insurance on your money, even if the probability of an exchange going bust is less than 1%, you still have to take all your money out, because if they do go bust, you lose everything. If it doesn't go bust, you only lose a fraction of a percent on trading fees for being cautious. And so there's really nothing to risk by taking your money out, and there's everything to risk by keeping it in. So basically that means bank runs are extremely common these days, and a lot of these exchanges, they're really not ready for it. In fact, Sam Bankman-Fried himself said that a lot of crypto exchanges are secretly insolvent, which was a bit of weird foreshadowing. But at first, it looked like FTX wouldn't go insolvent. A lot of people said this was very unlikely, since in the past, they've looked very strong. And that's what they basically said. They said, look, it's no big deal. This is all FUD, nothing to worry about. Alameda Research, who is closely tied to FTX, actually responded about these leaks in their financial balances. And they said, quote, they have $10 billion worth of assets that aren't reflected there. And that also, they have returned most of their loans by now. And most shocking of all was that they offered CZ to buy all of his FTT off market for $22 each, near the current price. Now, the reason for this is obviously to show that, okay, we're not scared. We've got the money to back this up. And if you really aren't trying to sink us as a competitor, you'll be happy to do this private deal, get a better price, and not impact our price. It would save both parties a lot of headache. But unsurprisingly, because these guys hate each other, CZ wasn't having it. He said he was going to stay in the free market, signaling that he fully intended to squash the price of FTT, and he did. FTT dropped over the next 24 hours 30%. And not only that, reports
That explained the crash of yesterday, guys. It had nothing to do with I don't know, the Fed's reason, rate hikes, none of that stuff. It was just two exchanges fighting each other, CZ and FTX. And that's exactly what happened. That's what's going on to this day, $4.52. This, as of yesterday, was how much again? I mean, that's crazy, bro. This was around $25 and it plummeted this much. From $25 to $4 in one day. That's what has been going on. That's the reason why the entire market has plummeted yesterday. But yeah, exchanges, they fight.
Reports started showing that FTX withdrawals were increasing. The bank run really was happening like CZ wanted. And this is where we have to go back to Alameda's CEO, what they said about having $10 billion worth of assets. Because there's some really key caveats about those claims. What are those $10 billion worth of assets? Are they cash? Because if they are, they're probably fine. But if there's something like more FTT token or more of Sam's other projects that he can't sell, well, that's going to be a significant problem for them when everybody's running and asking for their crypto back and they just don't have it. So questions were flying about what exactly FTX was doing with your money when you deposited it. Were they just giving it to Alameda Research, which is sort of acting like a hedge fund and trading with your crypto, trying to make a big return? Or were they keeping your funds safe and just practicing proper risk management? Well, this is where everyone just basically waited with bated breath to see what was going to happen next. Uh-oh, this looks pretty bad. They froze withdrawals. And at the same time, the team basically went totally silent and people commented on how bad this looks on them. Why aren't they speaking? And people started to circle back to old clips of Sam Bankman-Fried describing DeFi and crypto as basically a Ponzi scheme positively. And they wondered, how did any of us trust this guy?
I think of myself as like a fairly cynical person. And that was so much more cynical than how I would have described farming. Like, you're just like, well, I'm in the Ponzi business and it's pretty good.
At no point did any of this require any sort of like economic case. It's just like other people put money in the box and so I'm going to too. And then it's more valuable, so I'm going to put more money in. And at no point in the cycle did it seem to like describe any sort of like economic purpose.
Yeah.
So, yeah.
Well, if you're in DeFi by now, you would know that almost all of DeFi is a Ponzi, bro.
Things are looking really grim. But if you have your money locked up on FTX and you're clinched up right now, take a deep breath because things look like they might be fine. Although it's coming from a very unlikely source. CZ announced only hours after FTX paused withdrawals that they were going to buy them. Binance was going to buy FTX, the #1 crypto exchange, buying the #2 out. Quote, this afternoon, FTX asked for our help. There is a significant liquidity crunch to protect users. We signed a non-binding LOI intending to fully acquire
it's funny because
FTX.
When Celsius went down, didn't FTX, Sam Bankman-Fried wanted to buy them or something? I don't know. Somebody let me know in the comment section below. Confirm this story. I think I might have heard that somewhere at the time.
And help cover the liquidity crunch. Now, I'm at a loss for words. This is insane. If you're not sure what's just happened, CZ basically set his competitor on fire by stoking rumors of insolvency and then showed up with water buckets later, basically acting like the hero, saving the day. He just bought FTX out for likely pennies on the dollar in a move that's honestly going to go down as a bit of business genius and also cutthroat strategy. I mean, this was a shark move. Now, in the next few months, you're going to see SBF and CZ try to spin this whole thing as if there's no conflict between them and there was never any problems. That was just a rumor, but don't believe it. This beef was very real. Only days ago, CZ was saying that we won't pretend to make love after divorce and that, quote, we won't support people who lobby against other industry players behind their backs. So very much, these guys did not like each other and one of them just won the war. So the fact SBF let himself get bought out by probably the man he hates most in crypto just shows you how badly they must have been short on cash or the crypto that was being withdrawn. I mean, I promise you they exhausted every other option. In fact, reports are already coming out that FTX was courting basically everyone in Silicon Valley, seeking more than $1 billion, but that by mid-Tuesday, the hole in their balance sheet looked to be significantly deeper. And in the end, they had to sell out to their biggest enemy. Now, what does all of this mean? Because for one, this represents a huge centralization in the crypto space. You know, everyone wants to be decentralized. Well, the number one buying out the number two is sort of a big problem.
Yeah, that's another thing too. The hypocrisy in this space, bro. We want to be decentralized. We want to be You're on Binance, and Binance is the most centralized exchange out there. Most of these projects that are built on top of Binance are on top of an exchange that is centralized, bro. Binance is centralized. Binance, go and look up how many validators Binance have. You know, just recently when somebody tried to exploit Binance, look what they did. They shut down the whole chain. People couldn't even withdraw their tokens or do anything. They can do that, you know. There's nothing. I don't see a problem with centralization or like too much of a, like, I get this, no, not your keys, not your crypto stuff, but come on, if this exchange has been here for many, many years, you don't have to worry, in my opinion. You know, if something works, it works, just use it, you know, instead of trying to say we want to be decentralized so bad. You've seen what decentralized have done to you anyway. Being decentralized is just like the Wild West, peer-to-peer. I get Satoshi's vision and all of that, but decentralization for the past few years in crypto has been nothing but the Wild West of crypto, man. People have been, you know, it's dog eat dog out there, and not if you can't stomach that, just stay with your little centralized coins and stay somewhere and be safe, and yeah, you'll be all good.
Also remain huge questions like how they could have been out billions of dollars in the first place, and how exactly they were safeguarding customer funds if suddenly they find themselves at a multi-billion-dollar hole in their balance sheet after people actually look to get their money out. It seems to be yet another lesson that you should not trust these crypto exchanges as far as you can throw them, and that no matter what their CEOs say about not having to worry about anything, there could be significant liquidity crises that they're lying to you about. And on that note, I want to remind you that this deal is non-binding, and Binance can get out if the due diligence doesn't pan out, or if they just don't want to do it. So if you're invested in FTX and didn't get your money out when I and others started telling you guys that they were likely to be insolvent, it's not time to relax. Binance isn't necessarily going to save you, and you should explore all your options because your funds might still be in danger if this deal doesn't work out. As for FTX US, I have no idea what's going on with you guys. As far as I know, they just bought out FTX.com, although the deal is still pending, so who knows what's going on with that. This is just a wild end to one of the craziest weeks of crypto. World War III basically broke out, and a winner was decided. The true main character revealed himself.
See? All this gonna do is just destroy our market a bit further down. If we drop down to 14 or 10K, just another exchange went insolvent. You've seen what the Luna crash did to the market at the middle of this year. You've seen what the Celsius crash did to the market as well. And now you got FTX in the risk of going insolvent to the point where they want to sell out to Binance. You know, it's just sad. And now you have regulators looking at us crazy right now. And Sam Bankman-Fried and them, they were going over there saying, regulate us, regulate us, regulate us. And the regulators are looking at them. They're not even into crypto. They are outside of crypto. Big Brother is looking at us like, this is what you guys are? This is ridiculous. Like, what a laughing stock of the financial world ecosystem in that, you know. If we like to laugh at stocks, bonds, and mutual funds and all this stuff, but I don't think they are this reckless, bro. Like, crypto, the first time we became our own banks, for the first time we had the likes of Celsius, Terra Luna. You could get 20% APYs and all these high yields, and we wind up getting destroyed. We couldn't even handle customers' funds. So how are you going to expect a massive banking institutions to come over here and say, hey, instead of creating our own thing into crypto, we're just gonna go ahead and join FTX. Imagine if they did, and billions of dollars would have been lost because you had some idiots in the background either trading or just over leveraging themselves or borrowing some loans that they can't really handle. I like this CZ tweet right here. This one. Look at this. He goes, 2 big lessons for all these crypto exchanges going insolvent, right? Never use a token you created as a collateral. Celsius did the same thing. Who else? Allegedly, FTT. And number 2, don't borrow if you run a crypto business. Never borrow money if you are running a cryptocurrency business because, things go up and down. Tokens go down in value. Why would you borrow money if you're running a cryptocurrency business? That's the stupidest thing you could do. And that's what some of these exchanges did. And he says, don't use capital efficiently. Have a large reserve. Always have some reserve in the background. That's why any bank that you see, the banks that we love to laugh, they have a reserve bank to back them. They have something, capitals in reserve. They have some collaterals in the background to help them. Celsius didn't have none of these people. They try to be banks. They try to beat the banks, but they don't even know how a bank runs, how a bank runs. And CZ ended this tweet with, Binance has never used the BNB token as a collateral, and we have never taken on a debt. That is, stay Safu, man. Binance always Safu, which is good, this, ever since it launched in 2017, they've been trying to fight it. Everybody tried to fight Binance, but look what they did. They literally, took over the whole game when it comes to being an exchange. And despite the fact that Binance is highly centralized, Binance DeFi is dominating everything else out there. Binance DeFi is beating Ethereum DeFi, and everything in Binance is working despite the fact that they are highly centralized. Who cares? Your funds are safe with them. They're saying, hey, your funds are Safu. We're not gonna go insolvent. You're not gonna wake up one day and Binance disappears. The regulators have tried to regulate Binance, but they don't have a base. So how are you gonna serve them? There's Binance.us. The Binance is everywhere, bro, which is pretty much cool. One of the safest, I guess, cryptos. But for me, ever since 2018, 2019, and that, when Cryptopia went down, if you remember Cryptopia, that exchange, I have never left any token on any exchange, not Binance, Coinbase, no, none of these exchanges. Sometimes I put money on KuCoin if I see a big buy on some tokens and that, and then I quickly withdraw my funds and that. But other than that, I don't do trading. I don't do none of that. I just, hey, hold, buy coins and hold. At least you're looking at your tokens in your own wallet. That's why I always tell people, you're looking at the tokens in your own wallet. What is the worst thing that could happen? Price go down? It's still your money in there. Nobody's locking it up. It's not locked up in some funds. People making fake promises to you, and then one day your tokens disappear. You buy the tokens. You DCA in your own wallet. This is what I've been preaching here for many, many years on this channel, and this is how I intend it to go. And yeah, man, it's just sad to see all of these problems happening. Is done nothing but destroy our crypto ecosystem pretty much. This is like the micro vision of a macro reality in crypto right now, and we are in the middle, stuck in the middle, and we're gonna be victims, man. If we have another leg down, I'm kind of used to it, bro. I can't wait for Bitcoin to drop. Listen, go back to 7,500 or something. You see what I would do? I would ape in like crazy and buy some of these cryptos like I'm insane. Because it's gonna happen. If you don't have that much capital to put in to the market, do that. These other strategies that I've been teaching with HBAR and all of that. You can slowly ape in. You can put as little as $50 a week into the market, but choose your favorite cryptos to do it. Don't over diversify yourself. Keep it simple. Simple strategies where, look, most altcoins are down close to 90%. they can have another leg down. If they do, it's another opportunity for you to get in. So my take on that, bear market bottom, I think we are closer to the bottom than we are to the top. So why not start dollar cost averaging? You have 69, 68 weeks, 70 weeks, whatever, until the Bitcoin halving. Time is on your side pretty much. The ball is on your corner. You start dribbling it now. With that being said, let me know in the comment section below, what are your thoughts on the recent crypto crash, FTX going insolvent, and Binance stepping in to save them. Like up the video, share it, subscribe for some crypto content. I have been Mr. Nakamoto Crypto, and I'm out.